All right, good morning, guys. Happy Sunday morning. How is everybody doing this morning? Yesterday on Bitcoin, we had a little bit of a bullish pop out of this area down here. I was trying to find exactly where this thing found support because on the 4 hour you could see that you got to close way below that, but you didn't here. So, like, if you use this one and then look at this as sort of like a bear trap, I guess it would be around about the area. I found something on an hourly, but it doesn't coincide perfectly with why it found support here. So I mean, like, at this point in time, just to go down to a smaller time frame to see what's what, you just basically, what I would do in this situation is just realize that for whatever reason, price has found support here, even if I can't find a correlating reason as to why. Let's go over here and look at the 30-minute real quick. So this would have been your last bearish candle, a 30-minute before you traded away from the area. Let's see if that coincides with where we are currently. Look at that, beautiful. So it's essentially just that 30-minute candle right there, that bearish candle. So my girl made it obvious to me last night while we were talking about some stuff, that new traders, even if they're brand new, they're gonna come into my channel, they're still not gonna be able to follow what I'm saying. So, like, as far as down to a candle in itself, in its entirety, when I put together those videos, I assumed basically, like, people would already at least have the fundamental knowledge of what basic candlestick analysis is, what a candlestick, what it does, what it means, and all that. So I guess not. I guess later on I'm gonna put together something that basically starts from the very, very beginning as to what a candle is on each time frame, how it operates, daily ranges. I mean, that stuff. So right now we're looking at Bitcoin. It caught that bounce. I only got these trend lines up here basically to show what looks to be like a falling wedge, because it appears that some people are looking at this as a bullish pattern, and it can in fact be one. But you have a falling wedge all the way from back here, so technically, yeah, you could get a bullish pop out of this area. But when we got this one, because if you remember, I was watching this as a falling wedge, and then we got a daily break above it, and then that's when basically you got that move, this move here, which ended up being a bear trap. So like that, we were looking for this imminent breakout. I even put that on the video title before you had the breakout, that we were probably about to see one. You traded up into resistance and then you fall right there. I mean, that's as far as you made it before you fell. And then you went all the way down. Once you put in this bullish move to the upside, you immediately reversed face, came down and took out the bearish target, which was this candle's wick low right there. You can see that price never did trade down that low until we had this push. So that triggered any bearish targets. You would assume to see a bounce from that, simply because there's a lot of liquidity down here, whether it's people that are long with their sell orders down there, right? So when price trades into those sell orders and triggers it, it does bring about more aggressive selling, which in turn you would think that that would make price go lower. However, if those sell orders that are being triggered are being bought up as quick as they're triggered, like if there is a buyer standing on the other side waiting to buy up all those sell positions that get triggered, you would assume to see a big bounce. But you didn't get a big bounce. You got a 3-day bounce before it was sold into again. This is not strength. It is definitely not strength. It does look like whoever bought into this down here is defending that area of price. So yes, if the sellers are unable to push this price lower and get a breakdown with a big downside candle, then eventually you will have nowhere to go but up, right? But up. So look at yesterday's candle. So there's your daily support right there. So let's just get off of this and just put that there, as we know that's daily support. I don't necessarily need this trend line here, so let's get rid of both of them. I just wanted to show you what other people are talking about on Twitter and on YouTube right now, looking for this thing to break out. So this was a push up. We took out yesterday's high. Yesterday was a complete and total inside day candle. All right. When you have an inside day candle, it simply just means that you're trading inside the range of the previous daily candle. So this is an inside day. This isn't strength. This doesn't show strength. It shows weakness, if anything. Pushed up, took out the stops here, and then now we're seeing a push lower on Bitcoin. I would have never taken that short, first and foremost, because here's hourly resistance. There is an hourly Heath level right there. So you have two sets or two price targets or price points over here, 32,380.01 and 32,150.49. That can be resistance. So this is a close above this resistance. You tested this resistance, but when we were down here this morning, I posted in the Discord that it looks very, very weak. This should have been a bounce from here. This bearish candle pushed into your bullish Heath level right there, your demand zone. So when price pushed into that, you got your bullish reaction, but it wasn't a big reaction. It was a tiny reaction. But with that being said, each hourly close, each bullish candle's closing price will be resistance on whatever time frame you're looking at. So right now, we know that Bitcoin tested up into here in resistance and we're coming down, and we know that price checked a demand zone. So we know one of two things: either price can get some bullishness out of the area, or price is going to trade sideways to down. So when you get just close here above that hourly resistance, right, that shows possible strength. Then you got a test of this next section, which there's your bearish candle. That is your support. You got a test here, right, and a bounce, and then this. That's a close below. So in this section of price, in the last 3 hours, not last 3 hours, but let's say 5 hours ago, in these 3 hourly candles, we seen this breakdown. This is not what we want to see, especially when we got this close above resistance. All right, but this isn't a tradable event. There is no way you can trade this successfully. Here is your breakdown below support, right? Technically speaking, you could have gotten short on this push higher. So if we leave that there and go into a smaller time frame, which I do not do on crypto, I only look at the hourlies on crypto. You can see here's that level, right? That's that support. Boom, you traded back above it. However, very briefly, 15 minutes is what you got above that support. And then boom, this right here could have been your entry, would have stopped there. So technically you can trade it, but if you allow yourself to do that, what's going to happen is every single day you're going to be able to take hundreds of trades, right? Because this happens all the time. But that was a big sharp move to the downside. So now what we're going to see is if we get a reaction up in here, all right, then we can maybe possibly look for bearish entries on this, because we do know for sure that this bullish push right here is a bear trap, or bull trap, sorry, because there's your hourly close above and then immediate rejection sideways down. So we know that this section's a bear trap, bull trap. The problem with taking short entries down here is you're at the very low end of price, this price range for Bitcoin, right? So here, this is that capitulation push down and then out of the area with quickness, came in for a retest, bounce. So that's what you can see down here. You can see price trade sideways and get big pushes to the upside, big pushes to the downside. When I'm taking short entries, I want to take them on something that gives me a better risk to reward. There's no way to really get a sense of risk to reward on this short, because even through here, you're trading at support. Yes, you took out that support, but there's still support. There is support right there. And then even here, there is support right there. So you have two sections of support. So watch this push. If you get a push up, you can watch it for possible short setups, and you're only targeting there. That's it, from here to there. That's all you're looking for. You probably won't get a push up to there because this was a sharp move down. So people are going to be basically chasing price. So they're starting to get short now. Right now they're starting to get short, and this is not the way to trade, because you have to get your stop loss above a swing high at best. So if you're entering here and your stop is up here, you need price to come all the way down to $30,000 to get a 2-to-1 risk to reward. And then that means you're also going to be sitting in a lot of drawdown while waiting on this thing to turn around and roll over. Good morning, Tom. Good morning, Janet, Will, Peter, everybody. Thank you guys for being here. I didn't really have anything to talk about this morning, so I guess we'll just analyze price, and I'll try to go in depth of what I'm looking at. I understand that for some of you guys, it's going to be a bit repetitive, especially if you're further along in the strategy, like Jay Bradley and stuff like that. Like, he's already killing it. He's pretty much keen to know what I'm talking about, pretty much. Because basically I look for the same things all the time. On the weekends, you still have 3 sessions. You still have your Asian, London, and New York open. However, there's no banks that are opening, right? So the influx of volume generally is just from bots and algos and retail. Professional traders they're not taking positions on this stuff. Most of them, you know what I mean? Most of them, they just trade Monday through Friday and they're done. So this is just bots and algos. You can pre-program them things, so technically they can still have them things running. But it looks like Bitcoin's heading lower. All right. So let's go look at something that I was looking at this morning. All right. So we know that Compound had a big move up, right? It was off the lows by 100%. I was watching Compound and Luna for entries, and I never got one, right? I never got an entry on it because I wasn't paying close attention. You can see I have an alert for here. This is the daily. I was looking for price to trade up to this bear or bullish candle right there, and I wanted to see how price reacted. I'm not getting that. So basically this thing from the lows is up even now about 70% off the lows. So that gives us a good risk to reward. It looks like this 8-hour Heath level right there is holding price. Okay. So I didn't get the entry, and the question remains the same. Do I look for an entry now? Well, this is that daily level. You can see that we're pushing up to it right now. So I'm probably going to take a small position on this because of this candle move to the downside. It's not nearly as big as Bitcoin's, but basically these things do pretty much follow Bitcoin. Let me see here. Let me get this up and running over here so that way I can take a position on it if we do get up there. How many frames am I dropping? A bunch. What do you mean maxed? Alright. It's saying that I have maxed devices open and I don't. It's losing its mind. So watch $6.70 right here on Luna. I don't know if you can trade this asset or not, but this is what I'm going to watch. You can get an hourly push all the way up to there and still remain bearish. If you get an hourly close above that candle, then you're not looking for shorts. this would give you a decent spot for risk to reward. Even if you're targeting the low end of this range, this is your lowest end on your hourly candles. So here is a support zone, but you're going to be taking out multiple daily lows. All right. So here's the 17th, 18th, not quite to the 19th. So 2 days worth of lows if it decides to go lower. Just bear with me. I'm getting KuCoin up. CAPTCHA. Bear with me, please. I'm almost done. You gotta jump through hoops nowadays just to get logged on. Alright. Hello, Lone Radu, Lori V. Good morning, everybody. Good morning. So this alert, I'm going to go ahead and get rid of it because I'm pretty much going to be watching price the better part of the day. But yeah, keeping an eye on Luna. First target would probably be here. You could take some risk off if we do get this tight entry up here. You still got to get your stop above this wick high. So that will still provide you with somewhat of a decent risk to reward. You got your entry there, stop there. So down to that Heath level, this bearish candle here gives you a perfect 2-to-1 entry just to there. So right there, you could remove some of your risk, bring your stop down to break even, and if it decides to roll over and continue lower, you'll be situated just fine for it. But when you get in these lows, these are the bounces that I'm talking about. They're very whipsawed, very difficult to trade because you're at the lows. So people right now, they're trying to push them down. They're trying to push price down, but there's not enough people taking big short positions because of the fact that they're at lows. If they're going to take another short run at Bitcoin, you would want price to be higher off the lows to give a better risk to reward. So they're just basically sitting by waiting for Bitcoin to do what it's going to do. So let me put an alert just so that way I can keep an eye on it while I move on to different things. Let's put one here. We may not even get it. And then put one here to let me know if we're moving lower too quickly. I just want to know if we get up here, as that's going to give me an opportunity. That's where I'm going to look to get short. If we get down here, then the trade is no longer good. I'm not going to do anything. And then you've missed it and it's moving on. Hey Heath, if we are taking intraday trades, how much weight would you give to quarterly levels if it has been traded through many times? For example, Euro USD 11856. That's a good question. Very good question. Quarterly levels are good to keep an eye on, obviously, because they're big levels. But what you're going to see on intraday price action is you're going to see price go in, out, above, down, through, up, back, down, up, down. You know what I mean? It's going to be basically just going crazy around the level because it is such a big level. So we know that this one's going to be resistance at 18566. You have 18556. So that's that level that you're talking about. We go into an intraday chart. Always mark it so that way you know that it is indeed a quarterly. So that way you're not trying to take shorts directly off of it, or longs for that matter, directly off that level, because this is what you get. So it is a massive area, and this is why you're seeing this price action around it. So remember, it's it's big banks, big hedge funds, $1 billion or positions are being put on at and around this level. We don't know if they're buying it. We don't know if they're selling it, but see how price reacts to it. Beautiful, down, up, back down. So basically it's chopping around sideways. There is a low end of the range. There's a high end of the range right here, but that's just the hourly range. There's your low end of the range. Here is your purge, your push lower. There's your bounce up back to the quarterly, but you failed to get up there. So all of this price action in this square could simply be them, whoever them are. Oops. Let's see. Why didn't that work the way I wanted it to? Yeah, whatever. Oh, there it is. So all of this price action around this stuff here, this could be entries of big orders, big positions being put on. Since here is this push lower, we have to take short positions on the asset, right? Here it is. You're pushing lower. This is the quarterly level. Look how when price wasn't even nowhere near the quarterly level, what happened when it got to it? Boom, boom, boom. Bounce. Back to it. This is trading in, out, around, up, down, through, buy, see you later, alligator. This is orders being accumulated. Positions, big positions being put on. So there is a wick right here, but there's some here too. So I'm looking for shorts. This is a tricky thing also because the quarterly range. So when a candle's range is put in, how can we do that? How can I do this? Explain it. So each 5-minute candle holds 5 1-minute candles inside of it, right? So when I'm looking for entries and exits, I'm basically keeping in my head what the bigger time frames look like currently and what they may try to be doing, right? So on the quarterly, I know where we are. I know that we were up here. Now we're down here at the low end of quarterly support. So let's take this over here. That's going to be quarterly support. That's that hour. Let's get rid of it. We'll just put it up there at quarterly resistance. So this is a range of price from 122,156 to 117,208. That has held almost a full year of price. There's a quarter, there's a quarter, there's a quarter. So this quarter right here will be a full year of price inside of this range right there. So when we traded back up to quarterly resistance, we rejected. That doesn't mean that this is selling pressure. This is why I'm kind of hesitant about taking shorts down here, because look how close you are to quarterly support. That's quarterly support. See how close you are to quarterly support? And look how far you are away from quarterly resistance. So to me, the risk to reward on this asset is where? It's to the upside. That's where you have much more reward. To the downside, there's support. If you do get a break below this support on, like, say, a weekly time frame, then we can look for short side setups all the way down to this bullish candle first. That would be 113,759, and then down to this one, or this bearish candle there. So this is going to possibly act as resistance or support. This wick also may act as a temporary support, simply because it's a big time frame candle. So your open, high, low, and close, all 4 data points on your quarterly candles are extremely important. Extremely important, as I'm not the only one watching these prices. So are bigger hedge funds looking for where to put their money. Are they going to put their money into the downside? Are they going to put their money to the upside? Well, that's our job to figure out. And this is the thing why I keep looking at the bigger time frames as well, is because I'm looking to get in on this range expansion. So here's the trend moving to the upside, right? There is a pullback. It is not an outside range candle. You did not take out the low. So it is just a small pullback. Then you had bullishness, but it didn't continue. It fell. We would have wanted to see continuation if we were looking bullish. This does not look so bullish. It absolutely can be a pullback. So this is what we're going to do. We can look for short side setups because it does look like it's trying to go lower. Here's another falling wedge or a channel. These typically, not always, do break out bullish. So this is another reason why looking for shorts down here, you're only looking for a small target. First target would be this candle's close. So today when the market opens, you're probably going to get a pullback to test either the open, high, low, or close of this candle. So on the hourly, this is quarterly. What is this? Is this quarterly as well? I don't even remember, and I just did it. Yes. That's quarterly support. So let's write QS. So we know that's quarterly support. And then this will be previous quarter close, right? Because that's what it is. PQC. See, I could throw some fancy terms in there where we're just saying, and we're watching the PQC and the QS for the down low of the constitution, blah, blah, blah. No, I don't want to confuse people. I want people to understand what I'm looking for. When you're trading, what you're looking for is a range expansion. You're looking for this candle's range to expand, and you're looking to have a position on that puts you in the right spot for that range expansion. All right. So quarterly support is right there. We go back into our daily. So daily support here, daily resistance here. So you're tightening up, right? This is just near term. Daily support, daily resistance. Or you could just watch this candle here. I leave that up to you. This is basically an inside candle. So you probably won't see nothing. So let's just mark out this candle's high and this candle's low. Go into a smaller time frame. All right. And you can see how tight that range is in comparison to this range from low to high, in comparison from this range from high to low. See? There's a range, there's a range, there's a range. So you're trading from here to here. From here to here is trading inside of this. How can I? All right, let me see. I'm not very good at explaining this stuff. So here, there you go. So from this high to this low, this move here is trading inside of this range. Okay. Now your range has gotten tighter because you didn't make it all the way up to the outside edge of that range. So your range is coming in. There it is. And now this is trading inside of this. And then this and this is all trading inside of this. So we're looking for price to break out one way or the other. We got quarterly support down here. Then you've got the previous quarter close right there, which is going to be important. So what we wait for, if you're looking on hourlies, right, the Asian Open will happen, and then this thing will have to contend with this very, very near-term resistance right there, and very, very near-term support right there. So we're not taking any trades inside of this at all, right? Because there's nothing in here for us. So today, when the market opens, we're going to watch price for the Asian Open, whether it trades down and breaks below this support, right? What happens during the London? When London opens, do you get a push up and take out this resistance? And then we'll have more data and we'll be able to watch, say, this Heath level here. And then wherever, if it pushes lower first, wherever it gets that close, as those will be our two areas to watch for the previous day, looking for either a run on this swing high or a run on this swing low. that will be our objective tomorrow morning at 6 o'clock in the morning, looking for this swing high to be swept, for price to go up into there and take this out, or we will be looking to position ourselves for price to come down and take out these lows. Because once you get that move, then you can start to look to see if you get, for instance, if you take out this swing high, you also know that you have the previous quarter close right there. And you also know that price has been respecting that previous quarter. It's at least letting you know that positions are being put on here. So since we had all of this was a pretty big range of price too. So we have to take this into account, trade it back up, right into your hourly Heath level, that bullish candle right there. Not quite to it, but I bet you if you had your Heath level drawn from the wick, right there, boom, boom, boom. So people are shorting, right? You can see it in the chart, in the price. They're watching this. Our first attempt to get up there, to reach, to close above, unsuccessful. Next push up, unsuccessful. Then you had this slightly moving higher, but just ever so slightly. This is the Asian Open. This is why we don't trade the Asian session, because it does this sideways most of the time. We want the expansion. This is what we want. But this is a very small range even. Not really, 45 pips. So that would have been a valid short. Down to there. Where would your target been? Right here. This bearish candle. Because that is support. That is support until price tells you it is not. Right there. Push down in. This is where I'm taking profits. Here. I'm taking profits there because of this. Then I move my stop to break even and see what happens. Tried to get up in there, tried to take us out, didn't. Boom, there's your expansion. There's your downside continuation. Right? So this small trade just turned into a bigger trade. But you only had 1/3 of your position on during all of this. But this from here to here is going to make you more money than from here to here did. You see what I'm saying? So that's why we leave small pieces on. Right now, to me, it looks like it is sloped and moving to the downside, but we do know that we have quarterly support down here, but it is making higher or lower highs and lower lows with each push. So first move, if we do look to get short, it will be to come down here and sweep these lows, but that is it. We are not looking for this thing to continue lower. Only looking for that. That's when you will take off your profits, move your stop, and vice versa for the upside. If it shows us that it's looking like it wants to go towards the upside, then we will get long and we will be targeting this up here, and that's when we will take our profits. Because whatever happens down here is going to be big. You're going to see a move soon. You're going to see a move soon. Previously quarters closed, previous quarters support, or not previous quarter support, it is quarter support. So it's going to have trouble getting through here. But what you are specifically asking is, are we looking for just like a tap and then reversal for intraday price action on a quarterly level? No. Nope. A good rule of thumb is watch whatever time frame you're looking at to take entries, or whatever time frame you're looking intraday. A good rule of thumb is to mind where the hourly supports and hourly resistance levels are. Because even on that, even with an hourly resistance on a 5-minute time frame, you're going to still have 5-minute closures above that hourly level, right? Because that's either a trap or it's breaking out above the level. So if you're looking for an absolute support, look at it on whatever time frame your entry is on. If you look at the 5-minute, if you take a 5-minute, you can get a 5-minute resistance. It's all fractal. What I'm teaching you is fractal. How I trade on the 1 hour, on the quarterly, on the monthly, I do on the 5-minute. There is your highest 5-minute close. this bullish candle. That's it. Every attempt to trade above it was failed, and then there's your move lower. Set in a 5-minute support right there. So in this section of price, a 5-minute closure below or a 5-minute closure above is a break on a 5-minute chart. The problem is you need to know where your upper levels are, your higher hourly levels and stuff, because generally price is going to be trading to something, because something is the target, right? So when people put in these orders, I think I'm just confusing everybody more than helping. I'm sorry. So like if people are taking positions, entries and whatnot, they have, let's go back to the hourly, they have targets in mind. That's why price moves the way it does. Like when I say sometimes it looks like when I took an entry, price moved because of my entry. Obviously it's not what happened. What happened is that's where everybody's entries were. Everybody's. We were all on the same page. And we got the bounce where we got the bounce because that's where we're taking profits. So if people are getting long based on this push lower into this hourly Heath level, chances are their targets are going to be that wick high. So targets are going to make positions change. So profits are going to get shed, stops are going to get moved. This is why price works the way it does. Like these people down here got long solely based on hourly support, based solely on that. Now, these price will fake people out. It absolutely will fake people out. Wicks are always targets. We don't treat them as support or resistance. They are targets. All right, so in this range bound section of price, this is a 5-minute. Let's get rid of it. This is the 5-minute. Look at that 5-minute. Also coincides with your hourly. Right there. See that? 5-minute support, hourly support. Boom. Confluence, baby. All right. So here's your range from high to low. That's always your range. Look how price traded to support, got a close below it, and then immediately traded up back to resistance. So the range is starting to get narrowed. And then boom, this move down right here is to just fake people out. Instantly traded up higher, but did you take out your target? No. Then this, boom, target breached. This bounce is people taking profits. And then here you go, entry right there. However, this target is still unchecked and we must keep that in the back of our head. So we did take out the downside target. Will they be reaching for the upside target next? More than likely. More than likely. They will take that out. Not always, but this range is tight. This range is tight. You could get a spike up to there and then a move lower. We know quarterly support's below us. So this is very tight range. Very tight range. I know Aaron C. did capitalize on this movement. I think it was this movement. On gold, though. He caught that. That was a fantastic entry. Fantastic entry. Where's gold? Let me show you what he was looking at. Fantastic entry. Right here. Now, this is a 5-minute Heath level. It's hard to find those 5-minute Heath levels, but let's go into what he was looking at. Right? There's your hourly Heath level right there. Okay? So we can mark that off on the chart. Remember, he's probably looking at this price action here, looking maybe to take a short here. What time is this? 8 o'clock in the morning. There's your close above. Not looking to short off of this level, but this level he still has intact, ready, looking for short side sets. Why is he looking for short side sets still? Because this is support and this candle broke it. So this push up has to be looked at as a pullback for entries until you take out this swing high up here, right? So if you go into a smaller time frame, he took this at a time I wouldn't have. I'm only looking for trades for intraday scalps from 7 to 9-ish, 10 at the latest. This was 9:30. Your entry, 10 o'clock. This is, I can't remember which one. This is the 5-minute. This is your hourly. Also notice how that hourly coincides with that 5-minute closure there. So this is confluence for entry. You can also see here, price respected that. Even on this push up, price respected that. There's your reaction, right? So we already see bearish reactions coming off from the level. You never trade back up, down, down you go. Then you trade back up. You have to watch this level because you know that there were bearish reactions off from it. Here's a big 5-minute push into it right there. Down at any one of these areas, you could have got short. I don't know which wick he got in, but his short is literally, I'm almost assuming he probably took the short as soon as this 5-minute candle pushed up into that. And why not? He had a fantastic spot to put a stop above. You could have went over to here and put a stop above that one. And you see how tight your risk is? Very, very small. Very small. And then boom. And then the reward, much bigger. So let me go show you. Bear with me. Let me get this off here. All right, so he doesn't have any position size being shown. He does show how many pips he took, but we don't, that's important. That's not important. What's important is the actual taking the position. That's what's important. It's not important how much money is on the table, ever. Let me check this screen real quick. I know my volume's going to change. Maybe it didn't. Yeah, it probably did a little bit. So it's on 20 there. And it's on 20 there. So my volume shouldn't be changing too much, mic volume. Here is his actual entry. He took it on the 15-minute time frame, or that's at least where he drew up his risk to reward. So look at the risk. Here's his entry. So he entered on this wick, this one, or this one. One of these 3 wicks was his entry. And we know it's an entry because this is an actual entry. This is what an actual entry looks like on TradingView with Oanda. Or he's using FXCM, and it's a live account. So this is a real entry with real money on the table. The reason it says that he's up 572 pips is because it's gold. Right? It's not really 572 pips. It would be more like roughly around 5 or 50, 57, something like that. But that's a nice trade. Here's his risk. That's where he's getting stopped out if he's wrong on the trade. I don't know what the percentage of his total accounts equity is, but if you're a proponent of this channel, no higher than 1%, because that gives you the chance to lose 100 trades without blowing your account. Or more, because the 1% always goes down. You can take a lot of losses if you're only risking 1%. And in this case right here, just from looking at my naked eye, it looks like that's a close to 5 or 6 to 1. So he risked 1% and he's making 6% on the trade. This is what I'm trying to teach you guys how to do it. However, finding the areas of where the trade is going to be, that's the hardest part for a new trader, especially because you guys are looking to take many entries a lot of the time, and we're not, right? That is not what we do. I look for 1 entry per day. If I don't get it, I do not trade that day because I want only the best of the best entries, and I'm not always right. Like I said, I lost 1 trade last week. So that's why you have to use a stop loss. I don't know this thing is ever going to work, but I take the positions based on what I see on the chart. Fantastic entry. Aaron, you killed it. That's what it looks like right there to be an absolute killer in the markets. You show enough of that stuff. Look at that. It's as if though his short moved the market, right? Well, we know it didn't, but that's what it looks like. Boom. So Aaron, stop manipulating the market, bro. Huh? Is he in the chat? Yeah, you market manipulator. Yeah, that's what we're looking for. That's what this channel is built to help you guys find, is this. That's the golden ticket. Boom. Short, done. You post that in any chat and people was like, how did you do that? Long time learning, my friend. Long time learning. So I would have not taken the trade. Simply because, first and foremost, I can't trade CFDs in America, which sucks. Second, it's at 9 o'clock, almost 10 o'clock. So I'm seeing all this price action. My base scenario is going to be, it's probably going to be a range bound, choppy market. There's no point in looking for entry. But he did. Now, how did we know not to take this one down here? How did we know not to look for this bullish 5-minute order block? How did we know not to take this one? Well, because our hourly is up here. That's where our hourly resistance is. So when we look for our 5-minute order blocks, our 5-minute Heath levels, we're looking for them as close to a bigger time frame level or area, right? 8-hour, daily, 5 hourly, 4-hour, 8-hour if you're intraday trading. Dailies are good, but you can get a lot of crazy intraday price action. See, intraday price action to most people looks like garbage, but to us, we know it's not. So that hourly, his 5-minute Heath level was close to that hourly level. That's why he was looking there for entry. Okay, there you go, right here. There's your first push. So anybody that jumped the gun here to get short, we would have never done it. They're watching this 5-minute Heath level here, so they're getting short here. We know there's an hourly right there. And that hourly is probably going to get reached for eventually. Boom, there it is. Boom. Stopping out these people here. They are pissed. They're going to be even more pissed here in about 3 minutes. Boom. So they were right on the trade, but they were too early. This was the trade. Here, not here. Right? It was there. And the only reason it was there is because of that hourly. Right there. This is your push up into your hourly Heath level. That is your entry. Poof, down. Time of day. Yes, it was within 7 to 10, 7 to 11. So he's still okay. Me being a little bit more experienced, after 10, I'm done. I'm not looking for entries. And I'm generally not looking for entries up into 10. If I am not in a position by 9 o'clock to 9:30, chances are I'm done for that day. I'm not going to find something I like. But there it is. Perfect time of the day. Trend was down. He had already been shown that the market had a willingness to trade lower by taking out hourly support to the downside with this push here. So he knows automatically his bias is short for today. For today's price action alone, it looks like it's bearish. Now, he could have been wrong. Absolutely. This could have been a bear trap. And you would have known that had you got an hourly close above that level. So what you're going to have to learn to do as a new trader is learn to wait for that specific entry. And then you take that with the stop above it. And then if you lose the trade, you're done for the day. All right? Because that gives you a chance to come back the next day with looking for new opportunities. Fantastic trade, Aaron. Will, thinks he was doing bar replay on Pound Yen May 15th, 2019. August 9th was looking for a pullback for hourly short, entry 610, but it was ran away without me. Would you mind analyzing this leg down? Pound Yen May 15th. What are we on? I don't like that one. Where is Oanda? Here we go. Oanda. Alright. Let's go into the daily. Actually, let's go to the weekly. You said August 9th, 2019. August 9th. Oh, wait. May 15th to August 9th. Oh, that's nothing. There we go. Vertical line down. Let's get rid of this. Let's get rid of this. Well, we won't see it. Let's go here. So weekly resistance, you're trading right into it, right off the rip. Right there. But you said specifically, I was doing a bar replay. August 9th was on for hourly short entry, 6 to 10 a.m. So did you look for it on May the 15th or August the 9th? That's a long ways away for an hourly chart. I'm trying to find it, but my thing is loading so slow. Wait, I should be right there. There it is, yeah. Yeah, what am I doing? I'm an idiot. I'm already there. I already did the bar replay. So you're trading up into weekly. You said you were looking for a short. For hourly short. Okay, so this is probably what you're talking about. But you know why that happened, right? There's a weekly resistance right there. This is May 3rd. This is May 5th. You said May 15th is specifically. So let's get over there. What is this? This is May 12th, 13th, 14th, 15th. Right there. It's just that leg down I'm trying to catch. Ha ha. Never got an entry. And you're talking about specifically May 15th, right? So we're going to play it out. Let me speed it up so it gets over there. All right. So here's your trade. This is at 0-100 hours. That's midnight for me in the US of A. And I'm looking for entry from, well, let's get rid of that because I don't need that. Looking for entry from 6 a.m. from there to here. Let's go as far as to say 11. So that's 4 hours. Hourly resistance there. Hourly Heath level here. So in this box, this is our kill box, our kill zone. Yeah, I'm confused. Let's see what happens. It looks like you were trying to trade in during the Asian or something, because this is the time of day when we're looking for entries. This has got to be daily support. Let's go to the daily and see if that's daily support. Yes, that would have been daily support right there. So that's exactly where you're looking. You were looking for this trade. This trade happened at the London Open. That's when you got your push lower. Yeah, there's nothing to do there, my friend. You just missed it. That's daily support. There's the break on the hourly. So you were probably waiting for a test of daily support and you didn't quite get it. So in order to find why this was the entry, you would have to go into a 5-minute chart, and I'm almost guaranteeing you that I'm not going to be able to find it because I'm back too far. Second, I would never be looking for an entry at 4 a.m. because I'm not awake, but you may be. So what you need to learn moving on is sometimes the hourlies aren't going to go up and retest Heath levels or even support. It almost did, but that would have been your entry, right? That's when you're looking to get your entry. Here's the push lower, there's the breakdown. And also it's pretty extended, so that's a ballsy move looking for a short. Now it can always go lower, right? And this was proof right there. So that's what you're looking for. Yeah, there's no entry there for me neither. I would have not been able to get short there. Sorry. So that's just something that happens in trading. And then you had August 9th. I was looking for a pullback to August 9th. So I'm kind of confused as to what you mean by that. From May to August, there's a lot of time in there for an hourly entry. Let's go to August 9th and see if I can find. Oh man, this is going to take a long time. Let's do this. Let's get there quicker, shall we? Shall we? August 9th. Now we'll get there. Rapido. I said stop. Damn you. That screwed everything up because now I know that was the low. Son of a bitch. We'll still go in and see if we can figure something out because I don't know exactly when it was, right? Alright. August 8th, 2019, 1700. So right here is the open of this next daily range. That's the open on the hourly. Boom. There's your high of day so far. High of day. And we want 6 a.m. to 11. And this is high of day. Low of day. There. Because all we're looking for is a daily range expansion. New low of day. This is going to be your London candle. Boom. Big move to the downside. What did it do? There's the wick. Yep. This is a run on stops at 0300 hours. You are not looking to take shorts. That's a lot of price action down here at that was your target. That was their target. So remember, I always also say that the high probability trade is into the stop run. After the stop run, we have no clue what's going to happen. All right. So there's your high of day still. New low of day. Damn. Just boom, boom, boom. So yeah, there's nothing to do here either. Breakdown doesn't give us anything. Here would have been hourly. That's what we would have been looking for price to trade up into. And all you got was just straight down. There's no way to enter that. At any time that you do enter, here was the low of day, right? You're selling something at the low of day. With where is your stop going to be? Way up here. So there just wasn't a trade setup. There just was not a trade setup for us on this thing. crazy. Straight down. Still going. So that was a breakout of a descending wedge formation on the hourly, right? So what you could have done, I guess, is something like that. Find your actual support level, and you got that range or that wedge formation. Do you see what I'm talking about? So sometimes regular retail technical analysis does work out as well. There's your descending wedge, or your wedge that's descending, getting tighter and tighter to the downside. These generally break out to the downside. But even once you got your breakout, there's your hourly support, traded into it, there's your break, you never got a retest, right? You'd retested roughly about the midpoint of that candle. Would that been good enough for me to take? Probably not. Probably not. But it did happen at 6 a.m. in the morning. So this is your break of hourly support. There's your only retest. Midpoint. So let's get this line off. Let's get this line off. Let's measure the midpoint. Obviously, we're doing it in hindsight, but I can do this stuff while the chart's going on in intraday. And over time, you guys will be able to do the same thing. So this is that candle right there. This is basically one of the main things I use my fib for, is to find that. So if we scroll up, you can see that there's your midpoint. Wick traded up almost to the 618. So I mean, yeah, I guess you could have gotten an entry there, but the problem I would have had with the entry is there's nowhere to base a stop. Nowhere to base a stop other than the high of that hourly. But you're taking trade intra-trend. Like the best trade setups, the ones that I'm always looking for are these ones up here. And then I just let this stuff ride out with the 1/3 position. So yeah, just keep practicing. Like I said, man, you can make your own strategy. I'm just basically trying to give you tools, and then you can take those tools and apply them in whatever way works best for you. However, like, you may love the principles, everything that I do, but your entries might not be at the New York Open. You might like to take the London Open entries, which in my opinion are absolutely fine. If I lived in Europe, I would be trading the London Open and the New York Open, right? I would be trying to get my entry at the London Open, just because sometimes the London Open puts in the high or low of day. So I remember a long time ago when I first learned that principle, that the London Open sets the high or low of day, I'd be trying to wake up at the London Open and just randomly looking at where price was. Well, it's down on the day, so buy it. See if that's going to be the low of day. Obviously, that didn't work out. So, but yeah, it usually puts in the higher low of day. So technically, there is merit to be trading there. But yeah, I mean, it was a clean, clear, looked like it was going to be a breakdown with this formation. Going slow. You're not going to catch every single one, my friend. Every single one. I was short on this thing, and I absolutely somehow ended up closing my position accidentally, and I'm so bummed out about that. Okay, let me see here. Crystal ball. Yeah. Aaron's got the crystal ball now. I'm following you, Ed. Aussie dollar was a killer call. Jay Bradley fault. Yep, I seen that. I gotta go. I'll catch the rest. Hey, that's fine. Oh, what do we got? We got alert on Luna. Alert on Luna. Where are we at, Luna? All right, Jay Bradley. We'll catch you later, my friend. Man, you work terrible hours. It's Sunday, bro. Stop that. Where are you at, Luna? Damn it, it broke down. See, I wanted it to break up. See, now technically, like, we were looking for a possible entry here, but we wanted it to come higher. It didn't come higher. So now my entry is gone. I can't take the trade now. That sucks. but it's life in trading. Damn it. There's daily support. That wick low is right at daily support, man. Why didn't you go higher, bro? There's your move, though. This is the trade. See what I mean? Like, when you do find those entries, it looks like price automatically goes in your direction. That's when you're on the right side of the market, guys. That's what it looks like to be on the right side of the market. The market just takes off in that direction. And we were looking for shorts, right? I just missed it. I just missed the entry. I wanted it up in here. I even loaded up KuCoin for it. I just didn't get it. And now, boom. Here's your first profit target place to take. So, not even an hour late. Well, an hour later, we're already hitting targets, profit targets. We're not in the trade, but that's what I was looking for. So, damn. Anyways, we'll let it come up again once it goes wherever it's gonna go, and we'll look for entries. I don't want to look for entries down here. I only want entries up here, because down here is the bottom of this section of price here. Right here. See how it's got this rounded bottom? Let's get rid of all this stuff. Live trading session, and I just missed the friggin' entry. So there it is. There's your daily close. Right there. Yesterday's close. That's where we are right now. So definitely would have been a good spot to take profits, right? Look how this price is reacting to that level right now. It's fantastic stuff, guys. It's price. Price is king. That's price reacts to price. That's why I trade this way. There's support, hourly support. That's your daily close. Where's your daily, yesterday's low? As that may be the target. You took out yesterday's high. Do we go down and take out yesterday's low? Alright, let's go back into the hourly. Yesterday's low is still a far piece away. And it's this move lower. See, this is the thing. This is a bull trap. See, this is your move to the downside. This is your yesterday's range, right? Boom to boom. Here's low of day. Pretty good chance this is high of day here. Here's your bullish candle. Wait, let me get this up on high of day. Here's your bullish candle. Trading up into the Heath level. There's your follow through to the downside. However, market turned around before it hit targets. So this target is still there. Then you had sideways to up price action. Here's that bullish candle we would have been watching. There's a break above. There's a close into the middle of it. Down, up. Higher close than here. This is a bull trap. Here is your Heath level still intact. Still uncumbered. Barely closed above it. Boom. But this reaction is what we were looking to trade on this. This is why I wanted it to push on up. Wick or body. One of those two areas is where I'm looking for entries with a stop up here, targeting this. There it is. First trade successful. Next, you gotta wait to see if it holds support here, because this is a higher close, a higher low. This is a low. This is a higher low. Are we aiming for a higher high? It's very unlikely, because back here it's been making lower highs and lower lows. But it does look like it's trying to possibly turn around here. And you can see that on the daily with the wicks below. Boom, boom. It's the closes though. They're barely lower, but they're lower. So let's see where this thing closes today. Is this the long entry? Look at this wick. Maybe, guys. I just can't get long on this. No, I'm not looking to get long on this. This is a big drop. This is going to see follow through and continuation. Maybe put an alert here, see what happens. Alright guys, let me answer some questions. Have a good day at work, Jay Bradley. It just a leg down I'm trying to catch. Never got an entry. Starting on the 15th when we broke daily support. Yeah, you're not always going to get entries, Will. It's unfortunate, but just keep doing what you're doing and don't get discouraged, because I'm telling you, I did it for years. It's just practice. And practice makes perfect. It does. It will start to look a lot better to you. You'll be able to see the market the way that I see the market, and that's a pretty good way to see the market. Basically, I'm asking, what would your entry be to catch the short leg down? I wouldn't have had an entry. That's what I'm saying to you. I would not have taken the entry, because I have criteria that I need to see before I'm allowed to enter the trade, because that broke down before my entry. And I can't go into a 5-minute chart to find the exact reason why it turned around where it did. But even on that case, it did not give me an entry, right? Because that last hourly candle, once you got the breakdown below daily support, the very next hourly candle, it barely traded back up into the range of the previous last candle. So technically, if what you're asking me is where would have been an entry, I guess you could have watched the 50 marker on your the midpoint of the breakdown candle. That hourly candle that broke down below daily support, you could have put on your fib level marking the high to low of that hourly range and watch the midpoint. If you're going to continue to see bearish continuation, you do not want to see an hourly close above the 50 or the 618. You get an hourly close above the 618, you're not looking for short entries. If you get a wick up to that 618, like what happened on that candle, in hindsight, we know that the 618 test worked, but you can start building a foundation of, on the daily break of an hourly candle with a close below daily support, watch the next hourly candle, see if it goes up into the 618, with a rule set that you're not looking to take the trade if it closes above the 618. So that's a set of rules you could probably work with right there. That would have caught the trade. However, I would not have taken it, is all I was trying to say. So hopefully that helps. You're not confusing at all, man. That's why I do these streams. These streams are for you guys. These streams are for you guys. Hi, when you backtest, hello Kenji. What is the main time frame you are backtesting? I'm backtesting Euro Yen, but it's confused with different time frames. Okay, so this is one thing that my girl was talking about yesterday. It is very confusing with the different time frames. So let me try to break it down the best way that I can. Essentially, you want to know where your daily high, your previous day's high, low, open, and close were. Those 4 data points are a good spot to work from. As your next daily range, if it's going to be a trending candle, is going to take out either the high of the previous day or the low of the previous day, depending on what trend you're in. So, each candle, obviously a daily candle, this candle is 1 day's range. Now, you can't go on this daily candle just yet, because this daily candle will not be done until 8 o'clock p.m. But you can look at your previous day's candle. So you know that yesterday price had a range from, let's say, roughly 625 up to 679. So this was the entire range of that day. The open and the close of that day are going to be 2 vital points of data to watch when you're backtesting, looking for that stuff. So there's the open, there's the close of yesterday. At that point, you can go into an 8-hour time frame and see where those areas are. Obviously, it's tight because it was such a small range day, with this being the low and this being the high. So basically what you're looking for when you're in smaller time frames is you're watching how price reacts around daily opens and closes, 8-hour opens and closes, hourly opens and closes, right? So right now on the hourly, we are trading in yesterday's open, close. That's what we're testing right now. Yesterday's open and yesterday's close. This candle's where it closes will be important. If it closes above this line here, which is yesterday's open, if you start to see bullish continuation, then you're trading away from yesterday's open. And also we know for sure that we took out yesterday's high already. This right here, we took out yesterday's high. So we've already taken out yesterday's high. This could be a pullback. It's a violent one, but until you get a closure below yesterday's close, this could be a pullback. Unfortunately, maybe go higher. It doesn't look like it. That's a vicious drop, and it came in quick, so I wouldn't be looking to try to get long ahead of it. And plus you're in a section of price that is choppy and sideways, right? This is choppy and sideways. So it is difficult to take trading decisions based on that. It's difficult to explain. I just can't find the words to explain what to watch. All right, so let's do a little back testing session real quick for Kent, but let's go to Forex because crypto sucks as far as back testing, because it either only goes up or only goes down. And Forex, let's do something that let's stick with pound yen. All right, so here we go with different time frames. All right, tighten this up, tighten this up, tighten this up. Get rid of everything. Okay, so if you're back testing looking for entries, it's a little difficult, but what I want you to do as a beginner is just back test and watch how price moves and behaves. Okay, so you can see that when this candle was put in, this would be your Heath level daily, because when you put it in, price traded away from it. So any attempt to trade back up into it would be a possible opportunity looking for shorts. So you would watch the open of the bullish candle. That's the best spot. But sometimes, depending on how aggressive the bots and algos are, sometimes they will just run away once they test only the low of that, right? But you didn't get it. You didn't get it. So here's resistance. You're keeping an eye on resistance. But let's just go over here to where we are currently with price. Current price action. Current price action. Here is support. Where is my magnet tool? Why isn't it working? Here's the Heath level. All right. And then here is a resistance on dailies. These are all dailies. Please let me go into the hourly. Boom. Yay. All right. So that's news event more than likely. Put in a low. So people are going to be looking at that as a hourly head and inverse hourly shoulders break. Up here is an area where we're looking for possible shorts. Now you notice how that daily Heath level coincides with these hourly candles here. How these hourly candles closed around it. So you could probably watch this spot or that spot close to the daily as possible for short entries if you get up there, obviously. And then this level and down here is your ultimate support, right? That's what it was, right? Yes, because it's this last bearish close here before price traded away. So you could either look for a short sell up there or a possible bullish entry here. smaller time frames. Also, where I said you would possibly be looking for bullish entries, you do have an hourly Heath level right there as well. It's not even going to come down, so you're extremely bullish. So whoever bought down here was packing heat, right? Packing a lot of heat, because you went straight up. And like I said, this does look like an hourly inverse head and shoulders, so people were watching this stuff. So once this broke out, they were getting long probably on these 2 wick tests. So that's going to continue your bullishness, what it looks like from now. All right, so here's 6 a.m. Alt V. There's 11 a.m. Alt V. Daily level. So this is our kill box. All right, there's your daily level, Heath level test right there. Also, hourly Heath level test. Almost, not quite. All right. So here's hourly support right here. Hourly support, we know we got a daily level right there. Hourly here. Hourly close below that. We will be looking for entries short, and we will be targeting low of day. Well, we'll be targeting this first area right here, ultimately. That is, if we don't get a close below this, then you're looking for bullish entries, targeting these wicks right there. Bullish target right there. Bearish target's going to be down here. So let's stretch it out. 6 o'clock. Look how you put in this break of resistance. Your bullish candle's your resistance. There's your break above resistance on an hourly closing basis. And another hourly higher close. So what does price look like it's trying to do? It's trying to go higher. But we do know that there is a legitimate level there to short. So we have to be extremely careful. 7 o'clock. So what are we doing? We're looking for bullish entries. This was a retest of that hourly level. Right there. Still got to stop all the way down there though. I just don't like the setup or what it's showing me. Just feels like a trap. There it was. Boom. But you came down to hourly support. You broke this one and this one. So any wick up, you're looking for shorts. Targeting this down here. This wick would be my target. There's your push up. There's your hit of target. Boom. See that? Target, hit. We were looking close to shorts on the daily. Remember? Now we'll go back to where we are. Show you what we were looking at. Daily Heath level. Look at that test of the daily Heath level. Boom. That's your short entry. Now, I am short. Profits moved. Stop is all the way down to here, unfortunately. I didn't take the trade, but this is the way we're looking, how we're watching price. And just see what happens. It transpires for the next few days. Is that a stop out? Not quite. Damn near it. Oh, there's a stop run. Boom. So we're out of the trade. And then what are you doing now? You're reaching. What are you reaching for? This. That's your daily Heath level. That's what you're reaching for. If you can't get above that, you're going there. Where are we at? 1, 2, 3, 4, 5, 6 to 11. We are looking for bullish entries as long as we're not taking out this hourly support. So that's our base for the day. All right, that's what we're looking for. bullish entries. Here's a beautiful test of support right there. That's a valid entry. Valid entry. It came at 6 o'clock, so I might wait for the 7 and 8 o'clock candles, because 8 o'clock is the open. So let's see what happens. Okay. Boom. All right. So at this point, I'm looking for bullish entries, right? Because I had enough proof on this test, and look where we closed. So just use where you closed as your entry. It's not the way I trade, but stop. Get off right there. Target. First target is that daily Heath level that gives you a 1-to-1. This is a short. That's why it's not right. No, it's wrong. Go away. Sorry. You get the point. Boom. A little lower. Target. First target to there is 1-to-1. There's 271. Cancel. Oh, no. Boom, stopped out. So we were wrong. But that was the time of day for entry. You're still holding support. Support's down here, right? You lose that, then you're not looking for entries, but it's okay because we already got stopped out. And that's basically all I do over and over and over again, every single day. I'm looking at what price has done lately. It's still in a bear trend, right, on your daily. So looking for longs, here's your trend. Your daily trend is down. So looking for longs is going to be reverse trend, right? You're not looking for that, generally speaking. But this may take a couple days to set up. It definitely looks like it's trying to break. There's your daily push. Boom. Bearish day. Bearish engulfing day. Still could not get above that Heath level. See, that's why I said that's your entry. We took it here on a successful short. Then we were stopped out. You see how this works? There's your stop, run, boom. Bearish engulfing day. So even here was our entry. That's where we got stopped out. It still took several hours for this to play out. And then this is your London Open. Push up, stop everybody out, and then boom, drop it like it's hot. Drop it like it's hot. Drop it like it's hot. There it goes. See you later. And it didn't even come back up into here to give us a retest. That's when something is extremely momentous. When you get a big hourly range and then two very itty bitty tiny incy weensy hourly ranges and then follow through. So now we're looking for bearish entries on any push higher. Any push higher based on what we see on the daily. So here's how we can do this on the daily. So this is your lowest point. Here, wick low. Here's your daily Heath level. Boom. But since you just got this bearish engulfing, you're probably not going to get a test back up to that Heath level. And then you just watch your hourlies with those two levels intact. Boom. There's your Heath level. Oh my God, but look how momentous it came up there. My goodness, man. Short entry. And we're not getting any follow through. I mean, we would have been taking targets upon this level here. We never did get it. And boom, we just got stopped out. So that bearish candle there, that big daily engulfing, is that going to be a trap? Yeah, it's a trap. There's your bullish target. This wick high. Looking for longs, targeting this wick high. Boom. Target hit. Target hit. there it is. Now people are freaking trapped. So now our whole mindset changes. This is a bearish engulfing. But see, there's a bearish Heath level. There's a bullish Heath level. There's a test of it. There's bullish entries. But we wouldn't be looking for bullish entries because the near-term trend is down. And the main trend is sideways, right? Choppy and sideways. But now you have to assume that you're looking for bullish entries. Looking for this level. That would be your next target. So that's basically how I do it. I know I didn't really explain anything or much of anything, but there's your bullish entry. So what did we test on this day? Let's get rid of everything. Answering your question earlier. Let's get just this daily range. That's it. That's what we're looking for. Let's go into an hourly. Stretch it out. This is that big bullish range day. Here's your low. Why isn't it an exact low? It should be on the exact low. Well, anyways, here's your bullish entry. There's your midpoint test. And also, you held. What time is this? That's your London open candle. This big bearish candle, that's your London open candle. Knowing everything I knew, I would have been looking for longs on this day because that big bearish engulfing was a bull trap. Here's hourly support. Intraday support is hourly support right there. This push lower was to stop out anybody that got long here and here and here. Right? Boom. On the event that this candle closes up there above support, I would have been getting long on another support check with a stop below this wick. Boom. So that's all you're doing. Sorry about making this thing last a long time, guys. I'm just trying to help. Would it be nice to catch a 3-month trending move with a 20 pip stop loss? You damn right it would. Yes, sir. That's what I'm talking about. That's what I'm trying to do. Funny daily close, 1 hour level, 618, all the same spot. Yeah. That would be a long entry for me. Why should I not take it? You can take it. Yeah, you can take them, man. Absolutely. That's a beautiful long. DXY looking to run the stops. Let me answer this question and I'll go look at DXY for you, Aaron. I'm looking for short entry every day since May 15th, 2019 until the end of May. Watching daily, then go to hourly. Had got me. Yep, just keep practicing and just keep doing it, my friend. You will get there eventually. It just takes a lot of time, a lot of effort. It's not easy. It's still not easy for me. You know what I mean? I still struggle with this stuff sometimes because I don't know the future. And would you say Dixie looking to run the stops? Yeah, there's plenty of them up there. See, I have a daily Heath level right there and then an old support level right there. So, yeah, probably going to be waiting for a daily close above here. Like if Monday opens and we get a run buck up there and then close bearish on the day, I'm probably going to be looking for longs on the euro, right? Because yes, that would have been a stop run. And I'm willing to wait until Tuesday or Wednesday to enter that position. Now, if we get a push higher and a daily close above both of these levels, if you get a daily close above that wick high, you're going higher, all right? But if you get a push up and a failure and a rejection and a big bearish close the next day, we're looking for shorts or longs on the euro. All right, guys, I'm going to wrap it up there. It was kind of a long session, but I just want to help as much as I can. Yeah, so I'll wait for a couple more questions. But yeah, that's what we're watching. We're watching. You can look on your euro if you don't like the Dixie. You can see how it looks almost exactly like it. And the fact that we do got that quarterly support down there. Let's get rid of this stuff. It looks exactly the same. So we will be watching that. That also coincides with daily support there. Ultimate daily support here. right? Because the low close, not the low, the close is the support on a bearish candle. So you did get a bullish Heath level test, testing a bearish candle, and a slight bullish reaction off of it. Not much. Trappy trap, right? People are looking for this to break out because what it is, you know, descending wedge, they're looking for bullishness. So people probably already got long. You're probably going to see a push down to that. But like I said, what happens after that test, that's going to be the vital piece of info. If this thing comes down, takes out all these stops and rejects and closes with like a big, strong, bullish day, we're probably going to be looking for bullish continuation, right? It's at a vital area. This boom, 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 just sideways for 3 quarters. It's got to break out below quarterly support or above quarterly highs. We just don't know yet. It looks like it's trying, it looks like it had every attempt to go lower. So why would the bears want to come in now, right? It looks like it's being bought up to me. So let's see. It just looks bullish to me. Like it's holding. This is a big stab to the downside, guys, right? That's a trend change. There's your low. There's your lower high. There's your lower low getting taken out. Boom. You're in a downtrend. Get one more leg of price. Rejection. And now you're back down here. This is whipsawy ass price action. This is because you're setting quarter positions. They're getting ready to break this thing out for a yearly run, possibly. Oh, that was quarterly support. Screwed that up. I can always fix it, though. It's no big deal. See, this is yearly charts are just as important. What do you got on the yearly? Bullish breakout above yearly resistance. Here's your bearish test. That's just a pullback on a bigger time frame chart. And technically you could go all the way down to there. Bink. And reject. But that gives you a move up to there, there, and then there. So 3 major areas of your yearly chart. It's hard to say, but it looks like it's trying to run higher. Right? And we will see. This is a longer term downtrend, so maybe you're just pulling back to find support or run lower, but that's getting way ahead of ourselves. So let's just focus on this quarterly that keeps failing at this resistance. So if we get a breakdown on a weekly closing basis below this level, we're looking for shorts. But yeah, it'd be fantastic to catch this thing at the lows and it to go higher, or catch it at the high. The quarterly high is a fantastic place to catch a short. All right, guys. Got it. Thanks, Heath. Some trades you're just not going to catch. That's it right there. Once you understand that, then it's a lot easier on you to take those entries. You're going to lose some trades and some you're just not going to get. And that's part of trading. All right, you guys, you have a wonderful day. I'll be around pretty much all day, so if you need to hit me up in the Discord, go right ahead. Post any comments on this video. If you're in the replay crew, ask away. I always answer my questions from you guys especially. So you guys have a fantastic Sunday. Make sure you trade safe, trade smart. Happy trading.